Hello friends, is IAS 1 / IND AS 1 applicable to all financial statements and all entities? That is the topic of today's video. My name is Prateej and welcome to Deep Dive into IFRS. So IAS 1 / IND AS 1 primarily deals with the components of financial statements, fair presentation, fundamental accounting concepts, disclosure of accounting policies, and structure and content of financial statements. But if you see, there is no single IFRS or IND AS that deals with the financial statements as a whole. It is a combination of standards. But what financial statements are, how they should be, the structure, the content, the form, the disclosure requirements and all, it is primarily dealt with the following standards. IAS 1 / IND AS 1 deals with the overall requirement of financial statements. IAS 7 / IND AS 7 deals with the statement of cash flows to be given along with the financial statements. IAS 8 / IND AS 8 deals with the accounting policies to be adopted while preparing the financial statements. It also deals with the changes in accounting policies, changes in accounting estimates, and correction of errors. And finally, IFRS 5 or IND AS 105 deals with non-current assets held for sale and discontinued operations. So IAS 1 / IND AS 1 is applicable to general purpose financial statements and not to specific purpose financial statements. General purpose financial statements are the financial statements available in the public domain. That is what we come across in our daily life. It is available to everyone: shareholders, investors, authorities, management, users. We use these statements to make an informed decision whether to invest in a company or not. Specific purpose financial statements are financial statements required by authorities. For example, the banking regulator of a country like the RBI, the Central Bank of the UAE, Bank of England, or Reserve Bank of Australia, or the taxation authority of a country like Income Tax Department of India, HMRC of UK, or Federal Taxation Authority of UAE, or Australian Taxation Office. These authorities will have certain statutes which override the requirements laid out in IAS 1 / IND AS 1. So if these authorities are asking an entity to provide financial statements, those statements are called specific purpose financial statements, and the requirements laid out in those statutes always supersede the requirements laid out in IAS 1 / IND AS 1. IAS 1 / IND AS 1 is applicable to all entities presenting consolidated financial statements, separate financial statements, and standalone financial statements. But IAS 1 / IND AS 1 does not apply to entities presenting condensed interim financial reports. A separate standard, IAS 34 / IND AS 34, deals with this. So what are separate financial statements and standalone financial statements? Suppose an entity has investments in joint venture, associates, or subsidiary. This entity will have to prepare a separate financial statement of its own and a consolidated financial statement. Whereas an entity which does not have any such investment only have to prepare a standalone financial statements. Now IAS 1 / IND AS 1 is primarily aimed at profit-making entities, both private limited companies and public limited companies included. NPOs can also apply IAS 1 / IND AS 1 after making the necessary amendments to suit their requirements. And entities without any equity, they can adapt IAS 1 / IND AS 1 to fulfill their requirements so that the financial statements presented give a true and fair view. Now this is the brief idea about the applicability of IAS 1 / IND AS 1. I hope this video was useful to you guys. Till I see you in the next video, thank you for your valuable time.